Hi there and welcome to my channel Simply Stocks, and today I'm going to talk about Zomato, complete analysis of the results of Zomato. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position of any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Zomato, here is a small request. Kindly support me on Patreon. And once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed company talk or number of stocks you are holding, you can directly email me and we can work things out with a fee. And also, you cannot pay on Patreon. You can join the WhatsApp membership or the YouTube membership, and you get all the benefits of Patreon there. Now about the company, Zomato is a leading food delivery app and has been doing extremely well from the pandemic years, and so over the last 3 4 years has done exceedingly well. It is a household name. It is one of the players in the duopoly. We know about Swiggy, so there are only two players in here in India, and that is a big moat thing for something like Zomato. It has been gaining market share each quarter. It has been doing much better. They have expanded base by expanding into a tier 2 and tier 3 cities and would do continue to do that. Plus, in product wise, also they have expanded into by acquiring Blanket and doing other things into hyper pure segment that they have gone into, and many other factors. The market cap of the company has gone from 130,000 crores to 45,000 crores, and now it is looking attractive. So let me just go to their numbers, and then you'll be able to understand as to what I'm talking about. So this is Zomato per se, and if we look at their results, and this is the page that I've already opened up for you can say viewing, which is their result page. So if you look at the statement of unaudited, you can say consolidated profit and loss statement. So they have done, if you include other income, they have done sales of, this is it. So this is around 2,121 crore sales. This is including other income for this quarter versus you can say 1,260 crores of sales earlier. So this is a consolidated number, 66% growth in consolidated sales, which is pretty strong. Although there have been, you can say, pressure with respect to expenses, but loss has narrowed. So if we cut the long story short, loss before, you can say, so this is it, loss before taxes and everything, and you can say exceptional items and so on and so forth. It comes out to be something like 3,637 crores this time around. And it was, if you you can say uh, minus in December 21, if you eliminate the you can say extraordinary item in there which came in right in here of 3,158 crores. If you eliminate that, then the losses have been in December of 21 of 3,830 crores. So in December 2021, the losses were 3,830, 3830 basically, and this time around it has been 3637. So the losses have narrowed down. In fact, from 383 crores, the losses have come down to 363 crores. That is what I'm looking at. Don't look at the factor that the losses have widened, because last year there was exceptional item that we were talking about. Going further into the results, if we just see on the screen a website as to how the results have been updated, uh, they have taken out the other income, which is taken in here at 173 crores, which I have added in that previous slide. So if you take that out, even then the growth has been pretty good, 1950 crores versus 1112 crores, as I mentioned. This is a pretty decent jump of 66% on the sales front. And eventually, if you see, There is this other income of 464 crores, as I mentioned, in December 21, which had a component of around 360 crores or so of, you can say, exceptional item, one-off event. And that is why you see that the losses last time around was only 67 crores. Otherwise, losses would have been even more. So on a like-to-like basis, the losses have reduced. The losses have curtailed. Now we will go one by one in order to analyze as to why I believe the results look pretty good. So we'll go one by one in here. So the food delivery business altogether has done pretty well. So in terms of that, the food delivery business, as you see here, this is the gross overall value GOV of the food delivery business, which is actually whatever the overall you can say order value of a order is, which includes taxes, which includes everything, whatever is in there apart from tips. So in Q3 of FY22, it was around 54.99 in billions. So 55 billion round about that. That has increased to somewhere around, you see here, 66.8 billion. So it has increased by more than 20%, nearly 21%. Adjusted revenue has increased from 12 billion in here to around 15.6 billion. And if you go further into these figures, then you have contribution from the food delivery space into the overall revenue of the company was 0.62 percent. It increased to around 2.97%. Sorry, from 0.62 billion to around 2.97 billion, and contribution as a percentage of GOV is 1.1%, was last time around 1 year back. It has increased to around 4.5%. That's a huge jump in the overall gross value of the sales that the company does. Now, this is where things look pretty good. So, what has happened is that adjusted EBITDA has gone from negative 2.21 to positive 0.02, which is very, very positive. Adjusted EBITDA as a percentage of GOV, negative 4%. It was making huge losses, has been curtailed to absolutely break even. So it's at 0%. So it's at break even at the moment. Monthly transacting customers have also increased from around 15 million to around 17.5 million. That's where the increase have taken place. And average active food delivery restaurant, number of restaurants that they are in their ambit were 191,000 last time around, has increased to 207,000 crore. 207,000, sorry. Now, what is interesting in here is that the company has become EBITDA positive in their food delivery business space, and that is what is giving me a very good, you can say, understanding that the business is, in terms of adjusted EBITDA, is doing well. So you look at here from minus 2.21 as the EBITDA, it has gone to 0.23, 0.23. So they have become EBITDA positive on the food delivery business, which is extremely positive. A disclaimer, I hold the stock, so that is a disclaimer on my behalf. So kindly take my assessment with a pinch of salt, whatever I am talking about at the moment. All right. In the hyperpure business as well, you have a restaurant that were built were 27,000 restaurant in the hyperpure business, which has increased to 44,000 restaurant now. So there also we are seeing steady increase, 34, 37, 40, and now 44,000. Now coming to the quick commerce thing. The quick commerce business is basically the business of probably Blinkit, if you see it. So orders in which you deliver products in quick commerce, what happens is that the delivery of the product is done within 20-25 minutes or something of that sort. Orders from 22 million has increased to 31.6 million. Again, a decent 40-45% increase. Average order value from 528 rupees has gone to 553 rupees. It has also increased in a very difficult environment. Things have gotten much better for the company. Average monthly transacting customers have increased from 2.2 million in Q1 of FY23 to 3.1 million in Q3. So from June to December, they have increased sharply, although December is a seasonally strong quarter, so you have to take that into note. But still, the growth has been of nearly 50%. Uh, Now we are looking at gross overall value of the product that has been, or you can say all the orders. So gross order value from 11.7 billion, it has gone to 17.5 billion. Revenue from 1.6 billion has gone to 3 billion, nearly doubled. So 1.6 has become 3. Again, adjusted EBITDA negative 3.26 has gone to negative 2.27. So there also is an increase. And so we are seeing that even in the quick commerce business, although losses are there, but the losses are being curtailed at the moment. Uh, Adjusted EBITDA and revenue we see in here, and adjusted EBITDA has also means it has improved over the last 1 year or so. So basically what has happened is that the numbers have, you can say, improved sharply, and overall we are seeing that uh, the company is coming back into profitability, especially in the food delivery business. And now we come to the points that the management has mentioned, and I go one by one because this is an interesting presentation that they put up. So let's go one by one with respect to how the company has probably pointed out as to how the performance of the company has been, what the management, the MD of the company, and how they, you can say, see the future growth going forward. And I believe that we are at a cusp of a major uptrend in the stock altogether. So, how was Zomato's performance in Q3 FY 23? This is the thing. Food delivery business increased from 12 to 16 billion, as I said. Hyperpure from 1.6 to 4.21. Quick commerce, there was nothing. It has gone to 3 billion. So this is the thing. Now in others, what you see here is from 0.66 in Q3 FY22 to 0.75. It includes a lot of business which is in the Middle East, in Dubai, and which is seasonal in nature. And in the same, you can say, breath, I can say that from November, December onwards, they have virtually stalled their business in the Middle East in this quick commerce thing, and in a couple of other businesses. So in that sense, what has happened is that the numbers might differ in the others category. So that's the thing. Now the question here that has been asked is that there is a degrowth in the food delivery business, which grew by 30%, but saw a degrowth sequentially over the previous quarter. Why quarter on quarter there has been a degrowth? Because you see here, what we are saying here is that in Q2 of FY23, the food delivery business was around 15.8 crores, uh, 15.8 billion that they did. And in Q3 of FY23, when things were doing so well, the food delivery business reduced to around 15.6 billion. So what the management has said is that there has been issues, and there were a lot of, you can say, constraint in the major cities that was taking place. As a result, the gross overall value growth in food delivery business in Q3 was around only 0.7% on a otherwise seasonally strong quarter. Orders declined Q on Q while average order value grew. Now that is an interesting point that the company is making. So what happened was, average order value of each order grew in that period, and that is why I believe that overall the food delivery business is set to do better going forward, because sales could go up and down in that breath. But if average order value is increasing, that means the company is going to garner more money for each order that they are delivering, and that is from where the profitability would come in that sense. So that is my point in here. So another point that is being tackled in here are there signs of slowing down from a longer term point of view, and the management has refuted that power customers over the years have increased. Now this is a very interesting point that the company has said that in calendar year 2022, customers who ordered more than 50 times a year, they grew by 50%. So customers who ordered more than 50 times a year grew by 50% to 2.7 million as compared to 1.8 million. What that tells you is that there are returning customers that are ordering a lot. Means if you're saying that they are ordering say 52 times a year, that means they are ordering every a week. So they're ordering every week, that on an average. So if 52 weeks in a year, they're ordering 52 times. So an order every week is coming from one customer. That number of customers have increased by 50%. And the number of customers ordering more than 100 times a year, that means two orders every week, has increased by 70%. And that is what is giving me the confidence that the whole trend in this online delivery, food delivery market is changing completely. We were of the understanding in 2021 that because of the pandemic, the delivery business is picking up big time. But now what has happened is that people have now become, and I want to use this word, pardon me for that, but they have become addicted to ordering food online. Do write in the comment box what you think about it. But that is why what has happened is that customers, if you read this line carefully, the number of customers ordering more than 100 times a year, that means two orders per week, has increased by 70%. That's a huge jump. So the pace of new customers addition has also been there in calendar year 2022. We added 23 million new customers in 22 as compared to 23.6 million in 21. Again, 100% jump in new customers being added. So big thing in there. So another now main question is that we are looking at is, were you able to drive consistent improvement in profitability in the food delivery business? And the management has said that they were able to do that through operational efficiencies and cutting down of a number of cost measures. And recently in the month of January, now this is an interesting point that one of the members of Zomato management, Akshant, talked about, that in the month of January, we have exited 225 cities, which contributed 0.3% of our gross overall value. So basically, what they have done is that all over India, they pen down as to which of the cities the contribution is less, and they have reduced, you can say, their footprints in 225 cities. What that means is that they are going towards a business in which they would be concentrating on particular geographies where they are doing extremely well, where the revenue, you can say, contribution is quite decent, say more than 1% or something of that sort. So wherever their business had a 0.3% contribution, they are exiting those places. They have exited 225 cities, so their cost should come down going forward. So that's the thing. Now on to Hyperpure. How is the Hyperpure market doing? And they are saying that Hyperpure market is doing very well. The EBITDA margin has improved from negative 13% last year. So has improved to negative 13% this year from minus 16%. So again, 300 basis point improvement in the Hyperpure business as well. And if you look at the revenue from Hyperpure, it was one and a half, you can say, billion in 2022. It has grown to 4.2 billion, which is a huge jump of 170%. uh, so in Hyperpure, when can we see, you can say, breaking even and all. So in that sense, what the management has said is that the hyperpure business in some of the cities are coming to is coming to break even, say in Bangalore, etc., where the business they opened business 3 4 years back. So it's going to take a couple of years for them to come break even on hyperpure, because some of the cities they have just started with this sort of a business. So that's one thing. And now coming to the Blinkit results, the Blinkit results is also pretty good, and this is the, you can say, the business of providing groceries and other kind of products and everything, you can say essentials, within 30 minutes. So in here also, you look at it, so orders from 22 million has grown to 31 million. As I said, average order value has also increased. Everything has increased altogether, and gross order value in that sense has increased by nearly 60%. Revenue has grown from 1.6 billion to 3 billion. So you can say on a overall basis, even your Blinkit business is doing exceedingly well. Yes, there is losses, there's no question about it that there's losses, but losses have, you can say, reduced. So profitability continued to improve with contribution margin percentage of GOV. If you look at in here, minus 7.3% in Q2 FY23 to minus 4.5%. This, so quarter on quarter, they are reducing their losses in the Blinkit business as well. Negative 7.3% EBITDA margin to around negative 4.5%. So here also we have EBITDA loss decreasing from 2.59 billion to 2.27 billion this year. So again, numbers are much better on the Blinkit front as well, which the street did not expect. That the street expected that there could be heavy losses in here also. So that's another thing altogether. So overall, I believe that the numbers are pretty strong. Our numbers are pretty good. We are seeing, so if you look at, you can say screener, as I mentioned, a 66% growth in revenue means altogether is that the company is all set to produce very strong, you can say, FY23 sales number currently. So basically in FY22, March 22, if you see here, they did around 5,000 crores. So basically, let's just calculate now as to how the valuations could pan out 2 years from now. So basically in FY22, I am taking these numbers from March 22. So 4192 plus 793. So that nearly 5,000 crores of sales. Let's round it off to 5,000 crores of sales that they did in, you can say, full financial year 22. This year we expect, so this year till now, including this 2126 that they have done. So basically they have done 1948 crores plus 173. Let me add these two figures together. So we are coming to 2121 crores of sales in December. Yes, I agree that this includes Blinkit. This includes a lot of things, but 2121 is what they have done. If I, you can say, add up the other, you can say, revenue for the year, that is the September and the June quarter, and I add up the uh, other income as well. So we are at 5,535 crores for 3 quarters. Now let's say that in March 22 they did around 1,212 crores, which was similar to December 21. So if they do similar to December 22, they're going to do something like 2,200 crores or so. So on a conservative basis, let's say 2,215 crores they do. So they are going to do something like 7,750 crores of sales this year versus 5,000 crores of sales that they did in 22, and that is a huge jump altogether of 55% in terms of sales value. So my point here is that if it continues to grow in this vein, 7750 into say 50 next time around, so they will be around 11,625 in FY24, and on that just a 50% jump, 11,650 and 5,800. Basically they are going to do something like 17,000 crores in FY25. So if they do 17,500 crores of sales in FY25, and even if the company trades at say 12 times sales, not a lot, so that's 2 lakh 10,000 crore market cap, and currently the market cap is around 45,000 crores. So we are looking at 4.7x return on the stock in the next 2.5 years. I think the stock is set to do much better. 46,500 crore is the market cap right now. I think I'm very conservative in saying that they're going to do such sales. Now, people will ask that what to do with sales when profitability will not come in. The management itself has said and tweeted that they are looking to get profitable, EBITDA profit on the company on the overall consolidated basis by September of this year. So Q2 FY24 numbers, they should be profitable. So going forward, if we say FY25 numbers should be very good, and eventually the stock is headed towards you can say a market cap of 2 lakh crores or 2 lakh 40, 2 lakh 30,000 crore market cap, rather than having a market cap of 45, 46,000 crores. Again, a disclaimer that I own the stock, I have in my portfolio, and so kindly do your own analysis and take a call. Probably you will see a decline towards 50, 51. Just a little 1 or 2 minutes let me spend on the technical part of what the stock is doing. So it went up just recently, just before results, to around 54, 55. I think it can very well retrace back to say 49.50. But one can, if you have a 2 to 3 year time horizon, one can definitely accumulate the stock in this region of something like in this region of 48 to 52. So that is my call. Now let me just come back and onto the full screen, and so I believe that going forward, uh, my opinion is that the company is set to do well, and if you really want to take a little bit of risk, if you are able to do that, you can buy on a dip towards 51, 52, and hold for the next 2.5 years to make money in the stock. I don't think that there is a huge downside here. Yes, their food delivery business has shrunk, so maybe there will be some sell off there, but we are seeing all together in all sorts of their businesses, blanket, or you can say quick deliveries, you have hyper pure, all those kind of businesses, they are producing very good numbers on the bottom line as well. So they are producing numbers which are closer to being break even, which hopefully I'm pretty sure they should do by in the next 2 to 3 quarters. So FY25, FY26 could be very good. So a very good long term pick in my opinion is something like Zomato at the moment. So this was my video on Zomato and its results. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.